Hello and welcome to the House Einstein podcast. This is House Einstein podcast 91. I'm Osman Parvez, and with me is Hamish Crabb.
Hello, hello. Do you have a quote?
I do have a quote.
Okay.
Cities have the capability of providing something for everybody, only because and only when they are created by everybody. And that is from Jane Jacobs' Death and Life of Great American Cities, and really just emphasizes the breadth of opportunity in cities, and it's linked directly to all the people who shape it. And the reason that's the quote today is because we're going to be... Something just beeped. We're going to be talking... Okay. We're going to be talking today about the regulatory earthquake that has hit Colorado, particularly cities on the Front Range, and how ADUs are controlled, how development, how permitting happens for accessory dwelling units, and where there's an opportunity, and perhaps a little bit about what the future looks like. I'm diving deep down this rabbit hole this week with architect meetings and investor meetings to try to get our head around, can we make the numbers work now that a lot of the regulations have been eliminated?
Yeah, and I think it's same vein. I mean, we'll jump into this a bit more at the closing table itself, but similar vein as the occupancy laws and stuff that have been changed, right?
Well, it's part of that broad shift in policy that went into effect this year, yes. Although owner occupancy, maximum occupancy limits, they were just kind of with this all happened at roughly the same amount of time, but it wasn't specific to ADUs. But that has an impact too, and we're going to talk a little bit about that. I mean, these reforms really began in early 2023, and the impact will be felt for many years to come because development is really just beginning. That's the one thing about real estate. Unlike, say, the stock market that moves very quickly, real estate tends to move slowly. So ordinary people can take advantage of clear shifts in market behavior, or the regulatory environment might change, creating opportunity for small investors to get into the game. And for example, for a long time, we had virtually zero interest rates, right? We had interest rates that were at record lows, and that enabled a lot of investors, individual investors, to get into owning income property. That has not been the case for the last few years. Rates are so high that nothing cash flows in Boulder. But back in the day, people picked up quite a few investment properties because of their cash flow potential. And in fact, private equity got into the game and started buying hundreds of properties at a time. And those are still being liquidated from their portfolios today.
Yeah, this open door home up the street that's been on the market, I think, for like 3 years has finally sold. So it was interesting to see that. But we're not just talking ADUs today.
Right. Let's go through the whole topics. Do you want me to do it? I think you should do it, Hamish.
Okay, you're going to have to bear with me. I've got a bit of a cold coming through, so voice is gravelly. But we're going to cover ADUs first off, straight after this little discussion of our topics. We've got a closing that has just happened, so we'll recap that. That's going to be our Tales from the Trenches segment. Osman is putting together a newsletter, and there are some market insights, so we'll be talking about that in our market conditions segment. From there, we've got a little shameless self-promotion about, I think, the record holder for the longest time client without buying a home. After that, Xcel hits our In the News segment twice, and there's a little infrastructure project Boulder's putting on as well that we'll talk about. We've got Carveouts at the very end. I've had a little bit of a quality of life upgrade, and Osman's going to be talking about peeping the leaves.
Yeah, well, a digital quality of life upgrade, perhaps.
Well, I'll explain its physical quality of life.
Is it?
Right?
Okay, all right.
If I have to sit here for anything to happen, right?
Okay, fair enough.
Yeah.
Fair enough. We'll get to that. That sounds.
Yeah.
I look forward to hearing the details there.
Yeah, and it's actually a upgrade to our service as well as a brokerage. So I'll be able to talk about that in the Carveout section.
Cool. That sounds great. All right, so let's get into the closing table. This podcast is sponsored by House Einstein. We serve buyers and sellers in Colorado, focusing on Boulder, Denver, and several mountain resort towns, including Breckenridge and Winter Park. Our mission is simple: help you make a smarter real estate decision. You can learn more at houseeinstein.com or our YouTube channel, where you'll find videos on neighborhoods, specific listings, and much, much more. Hamish, what's an ADU?
Accessory dwelling unit. As far as I'm concerned, they're the buildings in somebody's backyard that you'll see on certain showings that are essentially self-contained little apartments, sometimes on top of a detached garage or their own freestanding structure. That's my knowledge.
Right.
Usually rented out. In-law suites.
Right. Well, okay. That's true. All of what you said is true. And I'll just add to that the distinction between an ADU and a duplex is there is a legal distinction in terms of duplexes have their own separate and their own separate legal address, and in most cases can be sold separately from the other half of the duplex. And ADUs have one legal address, one legal description. And sometimes they have a separate address. I've seen that in some cases. I'm not sure that was a legally separate address, but the owners sneakily put an A and B on there to keep their mail going the right place.
Smart.
Which is smart, but I'm not sure actually is an A or B legal address. In any event, up until recently, there were a number of regulations that basically prohibited the large-scale construction of accessory dwelling units. Accessory dwelling units are usually a small add-on to an existing property. They may be attached or detached accessory dwelling units, and they may or may not share power and water and sewer. In some cases, you will see some with 2 meters. They are usually much smaller than the main house, and that's by regulation, that they're not allowed to be larger than the main house. And the things that really kept communities, especially Boulder, from expanding the inventory or supply of ADUs were this regulatory framework that included things like parking minimums, and we'll get into a little bit of detail there, included saturation limits, so there was an arbitrary neighborhood or a distance from an ADU. You could only have so many ADUs within a certain geographic space, and you also needed these things to be owner-occupied in the primary home in order to construct an ADU. And that kept a lot of people from building ADUs, but the demand for housing is relentless. Boulder is one of the most attractive places to live in the United States, in my opinion, and probably in the opinion of most people that live here. Don't believe everything you read on Reddit about our community. Most people love living here, and it's an amazing place to live. And you really have to leave Boulder for a little bit and then come back to realize how amazing Boulder is for so many reasons. So it's an attractive place, and we won't keep hammering on what makes it attractive. It's no doubt attractive, and that's reflected in its real estate values, as well as the large number of people that commute in every day, as well as the people that attend school here at the University of Colorado or at Naropa. So what happened this summer was that a lot of these rules disappeared. Let's talk about the parking minimum one before. So there's neighborhoods throughout. There's a house type in Boulder, the single family ranch. I now do a small home index on just this style of house. It's typically 1,000 to 1,200 square feet, 3-bedroom, 1 bath as it was originally constructed, mostly in the 1950s, although there's some that were built in the 60s. Some of these houses based on some of these properties based on how the house is situated on the lot would allow the construction of an ADU or not, because you had to have 2 parking spaces, but those parking spaces could not be tandem, and the garage counted for one of them, so you could not remove the garage. And so it was actually there were actually only a smaller number. There were a smaller number of properties than you would think that qualified to do a garage conversion and build an ADU. So what happened is that a lot of people converted their garages without a permit throughout much of South Boulder. And in some cases, the front still looks like a garage, but I know from having lived on the street or through people that lived on the street that actually isn't a garage at all. It just looks like one. And in the middle of the night, they came in and converted it into additional living space. That's one of the cheapest and not legal ways people have creatively adapted to the regulatory environment that was in Boulder. So you had to have parking spaces off street for your ADU residents. So in addition to having to live there as the owner, you had to have you had to have an additional parking space. So you had to have a wide driveway, right? Enough space between the side of the house and the end of the lot to accommodate a driveway. And I have seen people literally remove 6 inches off the side of their house so they could have that deep driveway that would circle into the back, perhaps to build a garage or perhaps to construct an ADU. So it needed to be wide enough for 2 cars side by side, and you couldn't remove the primary garage. And all of these rules were very prohibitive for constructing ADUs. So those rules are gone. No longer is there a parking minimum. No longer is there a saturation limit, and no longer do you need to live in the property in order to get a permit to construct an ADU. There still are rules. It isn't like all the rules are gone. The bulk and form standard rules, the setbacks, the solar access rules, all of that still applies. The height limit still applies. But if you have a large enough lot, it just got a lot easier to go build an ADU. And it no longer, because it's no longer owner occupied, people that are investors could potentially build an ADU and turn it into a second stream of rental income. Although it's unclear to me whether you could have 2 separate leases. I'm not sure the city has an opinion on that or not. If somebody knows, please jump into the comments and you can educate me on whether you can have 2 leases or not, or if all parties are stuck on 1 lease. I know that you still are subject to the rules that govern short-term rentals. Unless it's owner-occupied, you're not allowed to do short-term rentals. But the city did just pass, or is passing, I'm not sure it's completely passed, it might be in their second or third reading of this lodging permit to basically create housing opportunities for Sundance. Because there's so many people that are expected to come into Sundance in 2027 when we start to see this. February, I think, is when it happens. 2027, that we need to make some changes and build housing or build inventory
for
of rentals, short-term rentals for all these people that are coming. So,
I can think of that. You've got at least one property with a detached garage that might be a good contender.
I do, and that is one of several I've been meeting with architects and others to discuss how to get our head around the back of the envelope math. Like if we can have what's the payback period for the capital investment? And can it be juiced or quickened with leverage? Does it make sense to lever this construction project, or should it be an entire cash investment? This is a challenging question to ask, because it looks like it's going to be very difficult to get that built for less than a certain dollar amount. And the cost of the construction, what's a reasonable payback period based on the incoming rent, the increase in your taxes, the increase in your insurance, the increase in your maintenance costs? How many years? Is it 7 years, 10 years, 15 years before it starts to free cash flow? And how does it also impact your depreciation schedules on the property? All of those things are important. You have to put it into a spreadsheet, which I've been working on, in order to understand whether this actually makes sense, but also looking for alternative construction methods to potentially drive down that cost, like SIPs, modular construction, effectively, that will potentially bring that cost down, because it's shockingly high to construct. Like, you would be really
especially
surprised.
In Boulder. Yeah, we've covered that for sure.
Right, especially in Boulder, but really anywhere. Boulder has also the cost to deconstruct if you're taking down a wall or something like that. And anything that the trades touch has to be brought up to current code. So you have to be really careful with what the scope of your project is. Personally, I'd rather see detached ADUs and
that's
keep
what
the
comes
original
to mind for me immediately. Yeah.
And I think that they're more marketable as a rental as well. Like if you ask yourself, would you rather have an apartment that's attached to the main house, even with your own entrance, but you have a shared wall, or would you rather have a completely separate structure in the back of the lot? And in most cases, we're talking about structures that are 750 to 800 square feet. So these are not gigantic housing units, but based on today's design, I just saw one today, and the architect did a fantastic job. It's a 2-bedroom, has vaulted ceilings. It's about 750 square feet. It is a generous apartment. It is really nice. Only a 1-bath. One of the questions would be, do we create 2 bathrooms and smaller bedrooms? Or do we have one larger bedroom with a nicer bathroom and a smaller bedroom that could be an office? And if it's aimed at students, you're going to want to do this 2 smaller bedrooms with the 2 bathrooms, because that's way more attractive for most people than the large bedroom, small bedroom.
Yeah.
But the impact on the density of the neighborhood is a real big factor, because no longer are there occupancy limits. So you could put 2 people in each of those bedrooms, which means a house that has been being and that applies to everything, right? So if you have a 5-bedroom,
load up the property. Yeah.
If you have a 5-bedroom house in the city of Boulder, let's say it's a standard South Boulder ranch, like in Martin Acres or Table Mesa, but more likely Martin Acres or Baseline. These are neighborhoods, by the way, in our fair city. And it has a full basement. Those are commonly converted into 5-bedroom houses with 2 bedrooms in the basement, 3 bedrooms up top. I've seen it with 3 bedrooms in the basement, Hamish, and 3 bedrooms up top. So you could even turn it into a 6-bedroom house. And then you could have 2 more bedrooms in the ADU. And if you have, let's say we're not crazy and we keep it as a 5-bedroom house, plus the 2 in the back, that's 7 bedrooms. Yeah. And you, in theory, could put 2 people in every, like the size of the bedroom I was in college is
tiny.
Smaller than this office, for sure.
Yeah, I have friends that went to CU, and there's a house that actually gained a reputation, but I think he was subletting to 6 or 7 different people at the same time. And it's a house hack thing, right? So like, especially once since they've peeled back the occupancy limits, now they're peeling back the saturation limits and all these things. The density can really shoot up.
For sure. And I'm sure the neighbors are not going to be thrilled when all 14 of these 20-year-olds want to park their hoopties on the street.
14 cars worth, yeah.
Right, 14 cars of hoopties show up. Who are they going to complain to?
It's CU, dude. A lot of them have nicer cars than me.
That's for sure. They have nicer cars than I had in college. But my roommate and I were in a bedroom smaller than this office. This isn't that large of an office. This is in the late 90s. We were in a really small bedroom, and you could put the bedroom, like basically you could put the twin beds on either side of the room and have a corridor in the middle, or you could stack them and raise them, and then you could have 2 desks on. It worked, but it was tight. It was intimate.
Seen a lot of like first year dorms that look a lot like that. 2 beds on either side. They're raised, and then there's the desk underneath them.
I've seen prison cells that are more generous than what I went to college in. But that's, times have changed and expectations have changed. But the design of what I just saw today, I was really impressed by. And the architect I was talking to gets that what we would design would be more minimal. And what he's designing is really for his needs. And so he's made some choices that make the place beautiful, but reduce its profitability.
Like broad appeal or profitability, yeah.
You have to ask yourself, are you building a slum, or are you building something can we build something that's both aesthetically pleasing and takes intelligent design principles into play and makes money? Can we do it? Can we have a payback period in 10 years? 10 years to me. 10 years feels like a reasonable payback period for putting the capital up. But I don't know if that's reasonable in everyone else's ears. They may want to hear 5 or 7 year payback, and that's going to be really tough in the city of Boulder, unless you slumlord it and fill this place with bodies.
So, I mean, I can see there's an equity play to it, right? You kind of boost, in theory, the value of your property by adding another dwelling. I think it's Austin where they've now gone so gung-ho on building that rental prices are actually dropping because the supply is kind of evened out. Could you see that happening here?
I don't, because Austin has not had the regulatory restrictions on building. We're still constrained by lot availability. So for every 100 homeowners in Boulder, how many would consider building an ADU for the profit or for the investment potential? My guess is like maybe 5 in 100 at best, or have the means. Sure, there's a lot of people that don't have the means, but maybe it's 5 in 100. So, and I can tell you, most of our clients, this does not really interest them. What does interest them, though, is multi-generational housing. So, and the payback is not about when they get their money back. Their payback is that they have their grandparents or their parents living on the same lot, and they can keep an eye on them. They have an independent living situation. They have their own kitchen, their own bathroom. It's designed to facilitate elderly people who have mobility issues. It's really simple, and it's not something that takes up a lot of maintenance. And because the cost for assisted living is so insane, a lot of families with older parents are looking at having the parents fund the cost of rather than pay $1 million for the academy, or it's even more than that, I believe, which is one of our assisted living facilities here in Boulder. It's the newest and probably the most expensive, so I suspect it's a lot more than $1 million. I think Fraser Meadows is $1 million. I think that was it 2 or 3?
I think it's like 2.5 or something. Yeah,
it might be 2.5. So rather than spend 2.5 for assisted living, how about you spend $500,000 building a really nice ADU, including all the great landscaping, make sure it's safe for an older person. That can be your place to live for the next 5 to 10 years. And then when you're ready to go into assisted living, at that point, true assisted living, we won't have this intermediary step. You could live with us for the next 5 or 10 years, and maybe you'll pass away before you need to be in. Like, not everyone goes through that slow, painful twilight. Some people pass away quickly and are independent right to the end. I mean, that's sort of the goal.
Yeah,
is to live with dignity and die with dignity. And this increases the potential of that occurring, like this deregulation. I mean, historically, by the way, I'm sort of anti-deregulation, and I've jokingly said Boulder is full, like we don't need more people. Mm-hmm. But I also firmly believe that we need housing, and if the city
there's a vote to be made. No.
Well, and I'm not okay. Yes, I am interested in a profit, but it's not the only check item in my checklist. Yeah. Like, does it serve a fundamental need? Does it solve a problem? And the city population has voted for this. The state has voted for this, and so I'm a big believer in democracy. And if this is what we're allowed to do, then if it makes sense, you should do it. And unfortunately, it results in a tragedy of the commons with massively increased density in our city. But you holding back and saying, I'm not doing that because I don't want to have more people living in our city, is sort of absurd, because you're a drop in the bucket, if that, of the increase of population.
So that was because and they get a platform more and more these days, but there's cranks anywhere you go, and that's what I'm calling it, cranky folk. And the first thing I can imagine them saying is, like, Boulder's full, it's going to be overrun, it's going to be slummy. But, like, here, 5 in 100 or so, I feel like maybe a little bit more manageable. Perhaps we see less people commuting in, a few more people living locally. Doesn't necessarily mean traffic into the city might get a little bit better. I'm looking for silver linings beyond what we already,
Having lived in large, dense cities, including Boston, I used to live in Medford and ride my bike to Cambridge through Somerville every day to work. It sort of bridged the gap of high density cities. There are parts of Boston that are high density, but where I lived was not high density. But still a lot more density than Boulder. And then I lived in New York City, and I commuted from Brooklyn to Midtown, where I worked at an investment bank, and it would take me an hour to go like 7 miles. Oh, and everybody was grumpy all the time. Everybody was a crank. There was a line for everything, and still is today. Although the city is far more livable today than when I lived there. It's way more pleasant, in my opinion, than when I lived there. But I didn't enjoy that sense of anger and tension that everyone seemed to have, or many people seem to have, living in the city. And from my biology days, I remember learning about the need that animals have for space from each other. Like you'll see birds flock together, but they also maintain space from each other. And all animals do that. But if you start to constrain that space, like think of
they'll stress out.
Chickens in a battery cage. Like where they're like, this is pre-free range, organic, right? Yeah. They literally will peck each other, possibly to death. Like they hurt each other, they hurt themselves because they don't have the psychological space they need. And I feel like New York City, unfortunately, it is an amazing place, but it has a reputation for not being nice and being really sarky to each other. A reputation that I will say that during 9/11, of course, fell completely apart. The city's got tremendous heart, but it also has a reputation of aggressiveness.
Yeah. No, I was on a shoot with Ian the other day, and 36 is the main highway that goes into Boulder. There was a crash, and the crash happened around 7:30. I was looking at maps before I even left, and the traffic was backed up until at least 10 o'clock. And I was saying to Ian, I was like, I'm pretty sure it's just going to be people are going to be upset in Boulder today because all the people commuting in have to go through that, and then like Monday blues. But hearing the commute time in New York and how everybody's a little bit more irate,
just short. There's just less patience and kindness and compassion with each other because of how many people live in such a small space and the hardships that everyone faces to make a living in New York City. It's tough. And so, that's one end of the spectrum. Is adding a few hundred ADUs going to turn us into New York City? No.
Without a doubt.
Will adding a few hundred ADUs increase the traffic? Absolutely. Will it reduce the parking? Absolutely. Is it going to reduce the quality of life? In my opinion, I think it is. I like Boulder being small and quaint, but that's a vision trapped in amber, and nothing stays trapped in amber if you want it to live. And it's changing. It always has changed. It doesn't look anything like, we're going to talk about historic homes in a few minutes, and some of these have photos. There's a photo that came up when I pulled up 720 Mapleton, and it's a photo of a huge swath of downtown, and there's so much space. It's insane. And there's no trees, right?
Yeah.
So now there's trees everywhere. How can you not argue that this is a nicer place to live now? There weren't bike paths everywhere. There were cows and horses pooping on the street. And there was, I don't even know if there was a municipal. What year did we add a municipal sewage system to Boulder? I don't even know the answer to that. But progress is not always bad. It's just comes with good and bad things.
No, well said. That's funny. The same video with Ian. Listeners, it'll be out shortly. Stay tuned. But I found through Carnegie Library a bunch of archival footage from the 50s, and it panned across, and I got to see Valmont power plant, but the rest of it was freaking barren. They hadn't even broken ground on a lot of Table Mesa at that point. Nuts to see. Yeah.
Well, we're going through a period of regulatory change in Boulder, and it remains to be seen what it will look like. But people that are investment minded or have needs themselves for more housing for their family, or would like to solve the housing problem, right? It's not just I want to make money. There's actually some benefits to putting in place affordability restrictions on your ADU. If you agree to do that, the city will actually reduce some of the requirements.
They have a program for that?
They do. As of right now,
cool. Yeah.
if your market rate for most of these single-story 800 to 1,200 square foot houses, 1,000 to 1,200 square foot houses, you probably can build an ADU that I think they restrict it to like 50% of the main structure. There are all these rules, but in theory, you should be able to do 750 square feet to 800 square feet max for many, but not all of them. And yes, you're more likely to get the bigger one if you agree to restrict your home to affordable only.
Mm-hmm. Yeah, I mean, at the end of the day, if you were, I don't think it's, what's virtuitous? Is virtue real? Either way, if you really wanted to just help the problem out, you could try and figure it out where it nets itself out, and you're not charging necessarily market, but you're covering all the costs from it. And again, we'll jump into this in the market conditions segment, but I can't necessarily clearly see where adding an ADU would lower the value of your home. So if you're able to cover the costs even just net, who knows? Not financial advice.
Okay, so your question is, like, let's say you spent $400,000 on an ADU, and you started with a $600,000 or $800,000 today, Martin Acres Ranch. Do you have a $1.2 million property?
Of course not.
Or do you have something less than that? In time, you're going to have something that's 1.2. You might, depending on the quality of the design, have something close to 1.2. But we looked at stuff like that this summer. There was a house on Martin Drive that you and I saw independently. I think I saw it at least 2 or 3 times, and I thought it was a cool property. The ADU that was there, I don't know if it was permitted or not, and it was a little small, but it didn't materially move the needle for our buyers, who, by the way, are still looking.
Yeah.
But it also wasn't a real ADU in the way I look at ADUs. It was more like a separate little studio shed office, not with a bathroom, but not really an ADU, like not big enough to live in, like maybe big enough to hold a, office hours for your students, or run a massage clinic, or I don't know what you're doing in there. But so the one thing to think about, I hear you, that you're not just paying for something and looking for payback. The asset itself has increased in value.
It's a little bit of an equity play, and I don't want to say anything as a certainty, but I could see it being. But then you're saying, the buyers, it didn't really move the needle for them.
Explain what you mean by an equity play.
You put money in to the property. In theory, you get a little bit more equity out of it than you put in. And so while it might not be like $400K plus $600K, equals $1 million.
Got it. So
it overall would, in theory, bolster the value of your place.
Okay, so that works in certain investments, like a flip. You put $100,000 into a flip, you could sell it for $200,000 or $300,000 more, depending on the extent of the flip and whether it materially increased the layout, the square footage, and so forth. Unlikely in Boulder to have those numbers, but for sure, there are. If you can control your cost, you are the GC yourself. You do some of the work yourself, but there's no free lunch. And there are very, very few home improvements where you put $1 in and you get $1.25 or $1.05 out. Like, you typically get 98 cents, 97 cents on your investment.
Yeah.
But the way I look at real estate investing is not to sell it, right? It's to own it forever. And when you think in those terms, first, the quality of the construction you're going to put in is going to be much higher. The design should be durable, as well as the finished material should be durable. The fixture should be durable. And when I say the design should be durable, be really careful choosing something that is full of novelty, because it looks snazzy, like barn doors, okay? Instead, you may want to think about things that, rather than spending the money on a barn door made of plastic, spend the money on a solid wood door, not a hollow core door that blocks sound. Right? Yeah. Things that are durable and create a sense of solidity to the property. And when your tenant slams the door, they're not going to break the door, right? And if they scratch the door, you could sand it and refinish the door. And the same thing with flooring, right? LVP is basically the leading flooring because it's so durable and it's cheap. And if you're going to put a bunch of students in there, that are going to trash the place anyway, you might as well have something that is hard to trash and cheap to replace.
Yeah, exactly.
So all of these things factor in, but for me personally, the exit in selling the property is not the game I'm playing with this particular style of investment. We've talked about flips internally as a team, and that's the game for flips, right? That's the game for rehabilitating a house and selling it, deeply controlling your costs. And our bench of subs or subcontractors at this point is deep enough that we could do it. I just have a hard time finding the right home to pull the trigger on, and the ethos of cut every.
We'd have the time, and that.
Well, we have the time. It's just a question of balancing the ethos of most flippers, right? There's a home I'm seeing tomorrow. I'm not going to mention the address, but it's flipped, but it doesn't look like a flip. It looks like all of the work was done to a high standard, and that is unusual.
The one that we sold the home of our client.
Yes, nearby. Okay. Yes.
Cool.
Yeah. Okay, let's move on, Hamish, because we have been on this topic, our closing table topic, for 35 minutes. But I will mention that if you are, if you found this conversation educational, you're thinking about buying or selling property, particularly if you want to try to examine whether they have potential for ADUs or multi-generational living, if you're trying to solve a real estate problem, this is our specialty. And we really enjoy helping our clients be successful, whether they're buying or selling. And that comes from deeply understanding what you're trying to achieve. And we'll add our thoughts and perhaps concepts that you hadn't considered, concerns that you hadn't considered, barriers that you didn't even know about as part of the process of advising you as a client. And if that sounds exciting, reach out to us at houseeinstein.com. We're happy to chat with you, no obligation. That is always the best way to reach us. And I think we should move on to our next topic. Now we're back. Okay. All right. So Tales from the Trenches. We recently had a client close on a property in the Chautauqua neighborhood. I don't know if I want to mention the address.
Probably.
I don't think it's probably not relevant to mention the address. But it was a super interesting deal. And now that it's closed, we can really get into what were the biggest challenges in this property. And it was marketed as an opportunity. Let me get the actual language. Let me just read you the actual language that it was marketed. I doubt they changed it after the fact. So it was marketed as tremendous opportunity to reimagine a home in a one-of-a-kind community with a rich history and enduring charm, which basically ChatGPT wrote this.
Enduring charm? No way.
Enduring charm, yeah. Okay, the house needed everything. And when we went in with our offer, which was a strong offer, above list, we anticipated a certain amount of work that it was necessary. The kitchens, the bathrooms, the windows. And we even anticipated that it might have some asbestos based on the terms of the contract.
Yeah.
And it turned out to need a lot more. It needed a sewer line. The roof had not been touched in many decades, perhaps ever. And it had a bunch of unpermitted work, as well as potential structural failure in an addition, and there was misinformation on the MLS sheet to begin with regarding its floodplain status. And all of those things were big ticket items that were not anticipated when we wrote the contract and went under contract. And we were under a pretty tight timeline, and in order to establish a negotiation ethically, we had to discover these things, which we did a lot of inspections and follow-ups with builders and all sorts of contractors and specialty inspections, and basically put together a spreadsheet of, okay, was this anticipated or not? Was it visible and obvious or not? And what's the price point of the real cost to fix these? Some came in lower than anticipated. Some came in a lot higher than expected. The structural, for example. and then put it together in a package with a pretty bow on it, with the inspection objections slapped on top, and see what happens. And boy, it was an interesting negotiation. I will give credit to the listing agent. It was a Bernardi listing, and her team, particularly Maria, did a great job professionally managing that negotiation without it getting emotional or tense between us.
Yeah.
Hold on, let me just wrap it up, Hamish, and then I'll let you jump in. And so we ended up with a really large concession. And it's only the second time, I believe, maybe the third time I've had six-figure concessions. And that's a big number on a home that eventually sold for $1 million and change. So the reason this totally made sense, though, to go down this road, like, is some homes are worth restoring and some are not. This has got $6 million homes nearby. It is an amazing location. It is actually architecturally distinct and interesting. It's a home that's worth investing in. And the seller came down to a number that was reasonable at the end of the day. And I pushed the client for another. At one point, the client was accepting what they offered. And I said, we can push for more. And I got them another 20 in that negotiation. And that actually cost me money, by the way, but I'm totally fine with that because my commission, how we're paid, is based on the purchase price. So reducing the purchase price hurts me, but it's fine. It's trivial.
It's the love of the game.
Yeah. It's the love of the game, and it's also trivial, based on what I'm actually getting paid. It's not material, but it's not why we do things. Is pure profitability. We also, of course, look at the profitability of the businesses we are in, but we don't, as a practice, prioritize our clients, our needs. So as a practice, we don't prioritize our profit over our clients, and due diligence and fiduciary responsibility are critical. But in any event, I wanted to bring up this deal because it was the packet of info that we delivered to the other side was extensive and well documented with reputable contractors with real numbers, and we managed to get it done in a really tight timeline and deliver it with a pretty bow. And so here's what happens if you're the listing agent and you get a whole bunch of information that you didn't know about the house. You are now required to disclose that to all future potential buyers. Your seller is also required to disclose it. So there's now leverage in the deal that you didn't have before. And that leverage was created by doing these investigations. Now, they can still think your information is bogus and say, we don't think this is real, but they still now have
to at least investigate it or disclose.
Well, they have to ethically and legally disclose to the buyer this material defect in the property. Now I'll let you jump in, Hamish. Sorry.
I was just wondering. I don't see it in here, so I don't want to bring it up by name or anything. But there was an incongruence in the listing, and I don't know how to dance around it. They had to regrade to part of the structure was in.
Unclear whether. So there was material misinformation in the listing itself, and we discovered that through due diligence, and we demanded a number for it because our offer was based on what was on the MLS and the best of our knowledge, and we had to justify and show them what the impact of that misinformation was. That was part of it, but that was separate from the inspection negotiation. Yeah,
I just remember that. I mean, that was seeing the emails go back and forth, and then that one I was like, oh, geez, Yeah. Super cute home. Showed it to them, and I can't give away too much, but we got to meet some of the neighbors, and they were fantastic and gave a lot of color into the neighborhood, and I actually think that made a huge difference with our buyers and their excitement for the home. So yeah, stoked for them.
I'm stoked for them too. It's an amazing house, and I can't wait to see what they do with it.
Oh my gosh,
I hope they get a great team and they assemble an amazing team to bring that home back to life, because that home really deserves it. It's such a cool property, and I can't wait to see what they do. But what's interesting, but just staying on this material defect thing for a second.
Yeah.
There are a number of things that are not considered a material defect in the property. that might surprise you. And this being spooky season, October, might want to mention that death in the property or even a homicide in the property is not a required disclosure item for anybody in the transaction.
It's a psychological defect, right? That's the terminology for it by DORA, I think. Those don't have to be disclosed.
In the state of Colorado, there's no requirement that we are aware of for disclosing those. And so we have learned through due diligence in various transactions, look, people die. And the most common place they're going to die is a house, right? And it's only recently that people go to the hospital to die. But even now, a lot of people die in their homes through hospice and so forth. Death is just as natural as life. But people have very strong feelings around a death having occurred in the home. And part of that is our lack of comfort with death and our lack of direct, intimate experience of death. So it can freak people out if they hear there was a death in the home, in particular if it was a homicide. And so I have been in transactions.
That wasn't this one, right?
Not that I know nothing about any homicide with this home, but I do know of a couple of listings, one of which we almost put under contract till we figured out that it was a home in which there was a homicide. And we did not go there because of that. And it's not just the Ramsey house. There have been other homicides in Boulder. There was a house in the Baseline neighborhood with a tragic husband-wife murder-suicide. That's like 10 or 12 years ago. And most people don't even know about it. And because of the turnover in the neighborhood, it's possible the neighbors don't even know about it. Although one of the first things you should always do as part of your due diligence, this is what we do with our clients, is go knock on the neighbors' doors. We'll go with you if you are embarrassed or uncomfortable doing that. Go there on the weekend, ideally, and say, hey, my name is Osman, and I'm buying the home next door, and I just wanted to meet the neighbors and see what it's like living here, and if there's anything you know about the house that you think I should know. Neighbors talk. In fact, earlier this year, one of the homes that clients offered on, we learned not from the listing agent, but from the neighbor that there was a child who committed suicide in the house.
Yeah, I was going to bring that up. These buyers, man.
A 12 or 13-year-old child killed themselves in the house. And that could be a real turnoff for a lot of people. I think my wife would say, absolutely not. We're not living in a home that happened. So you should know that not everything is required to be disclosed. There are some steps to get it's free due diligence. Go meet the neighbors and know the right questions to ask, but also know how to manage this negotiation process to your best interest in getting things resolved. And the principle I've had for a long time is, was it visible and obvious when you wrote the offer? And is it a real number? Like, is this really a defect of the home that needs to be addressed, or is it an improvement you're trying to stick on the seller? Like you knew the home had original windows. That's not a surprise.
Pretty visible and obvious, right?
And now you want the seller to pay $50,000 for a new window package. They're not going to agree to that. And you look disingenuous asking for it when you knew that was the condition. Is it truly a surprise? You didn't hop up on the roof. You didn't know the shingles were shot. So roofs are, in most cases, I think, are legit inspection issues. So have this conversation with your agent before you put an offer in on how to think about the inspection process and how to potentially use it to your advantage in getting things remedied that truly need to be remedied, either with a credit or with the repairs being made. And understand the process, because if you don't understand the process of inspections, you might get really surprised and unhappy. And as a buyer, as long as you didn't give up this right, you have the right to terminate by your inspection, objection, or termination deadline. It's in the contract to buy or sell. You'll get your earnest money back. But
you spent on inspection, but yeah.
You won't get your inspection dollars back, but you'll at least get your earnest money back. And honestly, you shouldn't be putting homes under contract that you weren't serious about buying. And most of the inspection items, most of the time, Hamish, we can see because they're visible and obvious before we write the offer. Not all of them, but most of the big ones we usually see.
Yeah, this conversation gave me an idea for probably next week's Carveout. So that's what I was writing down there a second ago. I was going to bring it up, but I can wait.
Cool.
No, I told them, I think we were about to, as you call it, the war room. We'd had our showing, and the buyers came to the conclusion that they wanted to put in an offer. And we were heading out the front door, and I said to them, I was like, if we do lock this house down and it sells, please let me see what you end up doing with it, because I cannot wait to see. I think they're the people for it. They've kind of got their head on the shoulders and the mindset, I think, for this type of, call it a project. And I'm really stoked for them.
I really like these clients, and they're so sweet. At some point early in the process, I could feel the energy shift. Like, I think as you start working with a realtor, people are naturally suspicious, right? Is this guy a sales guy? Is he just going to push me into something or try to pull a fast one? And at some point, it just shifted. And they got it that we were trying to help them to the best of our ability. And I feel strongly like we did that. And also, at the end, I haven't told you this, but they were like, hey, can we still be friends after this transaction? We're going to miss hanging out. And I'm like, absolutely. Like, we really like you guys. We totally want to hang out. And they've met my wife, and I think they're going to end up being good friends. At least I hope so. They're really, really lovely people. And that is actually one of the hidden things about being a real estate agent, is that you meet new people and you get to become good friends with them. There's that opportunity, if you're really vibing, as your generation would say. You have that chance to really build your friend base and help people make new friends and connect in the community because they're new in the community. So, absolutely, that's something that your agent can do and should do if they like you.
Ideally.
And you like them. I mean, I don't know. It's a little secret hidden sauce to the real estate business.
Yeah. Yeah, that was a nice deal. Market conditions also.
Yeah, I've been so deep in the rabbit hole on market conditions, and I've updated the what used to be called the Martin Acres Index, and I now call the Small Ranch Index, the basic house index for Boulder. I guess I'm still playing with the wording of exactly what to call this, but it is your typical 800 to 1,200 square foot or 800 to 1,400 square feet. I'll double check what I indexed. But it's an index of basic 3-bedroom, 1-bath houses with 1-car garages, no basement, not too big, not too small, like your basic entry-level house in the city of Boulder, tracking that all the way back to 1997 and looking at the median house price. I updated that. And I also looked at Denver, Boulder County, Longmont, Fort Collins, and updated all the data series for all of those and looked at the patterns all the way through the end of September, which just ended last month, all the way through the end of August, not through the end of September. And I have to update this all in about a week. So this data...
Unless you publish it this week.
it's gonna get published. But what's really clear is in most of these markets, the demand side has normalized, meaning that it looks really similar to the 3-year average. You see a seasonal pattern, as you would expect, and then the last 12 months, which is what the charts show, closely hits the median of the last the average of the last 3 years. So for example, August, take the average of 2024 August, 2023 August, 2022 August, and then compare that to August 2025. And that is what that data is showing, is how close to the average of the last 3 years for this month did we do.
How normal are we, right?
Well, how close to average are we?
Yeah.
And
specifically,
it is astounding. The demand side looks very close to average across the board for houses. The supply side does not look the same at all. And I'll tell you quickly, the worst market in the zone of what I just talked about is Denver. Denver has more than 200%. It had more than 200% at the peak compared to the average inventory. So not 100% more, more than 200% more inventory. This is the change. I probably got to think about how I express this because it can be a little confusing. I'm not saying there's 200% inventory. I'm saying there's 200% more inventory. So if there was 100 houses,
more houses available than normal. Yeah.
I'm not talking about. So if the inventory is 100, in the average is 100. Yeah. I'm not saying 200. I'm saying 300 times inventory. 300 is the inventory level, not 300 times. It's astounding. All right, and I know I think I'm expressing this wrong from a statistical perspective, but I just explained it. So you get it, right? We're talking about
you gotta get it.
you gotta get it. Okay, so Denver is by far the worst. Longmont started off pretty bad and is now the best of these markets. Oh, actually, Fort Collins might be even better. Hold on, let me pull it up. I gotta look at this.
Before I guess we go too far, how are you looking? Like, what's demand? Are you looking at like percent under contract, or this is a demand side is relatively on par?
Great question, Hamish. And for demand, I'm just using sales volume.
Okay.
Sales volume is
that in theory wouldn't really change, would it?
It's just a proxy of demand. It's not perfect, right? Because demand in theory exceeds closings. There's people that aren't able to find a house, and they may have put it under contract. You could argue that demand should be sold and pending, but I think sold is fine as a proxy for demand. And active available inventory that you could buy, not pending sales, which is active inventory that's under contract. I think active inventory without a buyer attached to it is a good proxy for supply. And there's a delay of 30 to 45 days from the day something goes under contract to the day it closes. So we look at pending as well. And when you look at, and actually I'm just going to show you the chart, Hamish. I'm going to do it right now in a screen share. And I don't know how this is going to turn out.
You don't have to share if you don't want to. I can always put it in afterwards.
No. We'll just show it
you should probably share so I can see it, right?
Yeah, you need to see it. So I'm going to zoom in a little bit. I don't know if this is going to work for the video, but this chart shows active single-family house inventory versus the average of the past 3 years. It really is. It is really a change from the last 3 years, not versus. I guess that's where it's confusing. So here's Fort Collins. This is that top. Oh no, sorry. Top line is Denver. Here's Denver crossing the 200 threshold and coming down to 100. And the yellow with the circles is Longmont. Started at 100, is now down to below 50. And Fort Collins is very similar. It's roughly about 50. And after that, you have Boulder County and then the city of Boulder. And because Fort Collins drags us all the way up to 208, it's hard to even see the separation between these other cities.
It skews the whole graph.
But we're gonna go ahead and look at it. 2.05. All right, now you can see it a little better, but still, you're looking at not much difference between these markets now and August. So supply is coming. The supply overhang is coming down, but there's still, we're looking at 40% more inventory than last year in Fort Collins, 39% in Longmont, 46% in Boulder County, and 49% in the city of Boulder. So this is data I have not published anywhere else or talked about yet. It's going to be in the newsletter. I'm going to talk about what is the impact to buyers and sellers. How should buyers and sellers be thinking about the fall market and the probability of the spring market being lower in price, right? One of our clients said it point blank. He's like, am I going to regret buying this house because prices are going to fall so much further in the spring? If that house was in Denver, I would have said, yeah, there's a good chance that prices are going to be lower in spring. There's still 100% more inventory than last year. And in Boulder, 50% more inventory. And we've been down this rabbit hole with like your price range and your location and your property type. And every time we look at it, there's a bidding war. So that tells you something too, right? Like the odds of your thing going down further, very low. Pretty much In Boulder, anything over $3 million, I would be very cautious buying, and I would make sure you're getting a heavy negotiated discount. And you'll see that in Tales from the Trenches that we're going to get to. In Sales of the Week that we're going to get to in just a minute. That buyers get the message. They are negotiating aggressively. We're seeing the types of discounts we normally see in November and December. We're seeing now in September closings. It might be short-lived. But for more investment advice on the buy side or sell side, real estate advice, check out the newsletter, because we're not going to talk about it anymore. There's juicy stuff in the newsletter.
And not investment advice, right?
And not investment advice. Unless you're a client, pick up the phone and call me. We forgot our disclaimer, Hamish.
Do you want to... We'll record it at the end and I'll snip it in.
We'll just say it right now. So you just heard me say investment advice, and this podcast is entertainment. If you are listening to this podcast, please don't make any real estate decisions based on what we're talking about here. And if you're a client, pick up the phone and call me. And I'm more than happy to give you personalized advice specific to your unique real estate situation. Or call your House Einstein agent. If you're working with another agent, call them. Don't call me for this advice. And as far as what we just shared, consider all of that entertainment. And don't go buying a house because of what I said.
To come is also entertainment.
Yeah. But it's certain price ranges and locations, probably low risk of further price declines. At certain other price ranges and locations, particularly above $3 million, high probability of further price erosion.
Yeah. Without plugging too much, this newsletter also gives Osman the opportunity to talk openly about listings that are active on the market. And considering the amount of inventory that there is, I'd imagine that there's probably going to be some pretty good ones in this newsletter. I'm excited to see your picks, Oz, and get the newsletter out with you. But that's the only place. We have to have a gate or somewhere where you have to intentionally sign up. We cannot publicly talk and dish about active listings, and that's one of the fun things, or I guess the neat things, the edge that our newsletters provide. So if you're wondering... if you're wondering what's good out there or what's bad or what's overpriced, Osman might be able to show you directly in the upcoming newsletter.
I'll tell you what's in the queue. I won't tell you anything about these houses, but I'll tell you the addresses.
You can do that.
Sure. Sure. Why not? 643 Mapleton listed at 5.4. 440 Christmas Tree listed at 4.75.
Christmas Tree.
And 125 South 35th Street listed at 835. And that home fits the index for basic homes in Boulder, and also because of its location could be a fantastic home for an ADU. And sparked
find out more.
Me going, you'll find out more in the upcoming newsletter, where I dish about the pros and cons of each of these listings and even talk about the price. Okay, so let's. I think that's a good segue to move to sales of the week. All right, let's talk about sales of the week.
Yeah, I've got to pull them open yet. You want to start up and I'll get my side organized.
First property, we're going to enter the Wayback Machine and go back to 1904 when this home was originally built. And we're talking about 720 Mapleton. It's located on Mapleton Avenue, a couple of blocks to the west of 9th Street. So you go past the little Mapleton Hill Early Childhood Center, and it's on the left side or south side of the street, which some of those homes actually have views. I don't think this one really had views, but it had originally been listed on the market. I mean, they tried to sell it in 2022 and were unsuccessful in 2022 when it was listed at 5.25. They brought it back. Hold on, let me get the listing history. Make sure, did they sell it privately? They did not sell it privately. They still owned it, and they just kept it. And then they relisted it this year in April at 4.95, and they quickly cut the price. Well, not really quickly. They waited all the way to the end of August, middle of August, where they cut the price to 4.725. About 2 weeks later, it went under contract, and a buyer scooped it up at $4,587,500, which, if you do the math on the last list price, is a substantive discount. It's not quite a 10% off, but let's just do the math. What was it? 4,587,500 over 4,725. Oh, no, wait a minute. I got the math wrong. Yeah, no, that's right. 4,725.
I'm supposed to be your quant.
Yeah, 2.9%. So not a massive discount. It's actually a pretty typical discount for a lower-end home. Near the end of the year, the types of discounts we see on a stale listing like this could be 7 to 10%. But the house itself is fantastic, and that's what first drew my attention to it. It was built, 1904. At one point, Joel Smiley owned the house, and if people are familiar with that name, if you are not familiar with that name, you should be, because Joel Smiley is one of the very well-known builders in the city of Boulder, specifically in regard to historic homes. This is somebody who does a lot of historic home restorations in Boulder, and I've only heard good things about their work. So this person owned the house, probably did a lot of the updates, although we don't know what was done during Joel Smiley's ownership. But if you look at the photos, you see a home that is just classic. They did such a great job over many owners, right?
Yeah.
In maintaining the character of a historic home, but giving it modern updates. The built-ins are excellent. The kitchen is, all the fixtures and finishes are appropriate. The millwork looks great, and it's turnkey. Every aspect of this house is turnkey. The little back patio is really cute, and it's got I think it's an ADU in the back. Let's see. Yeah, it looks like one.
Have a look.
Like a little space above the garage.
It's adorable, though. It's very stylishly done. I don't think they're doing anything on the bleeding edge of design, and for a home like this, I wouldn't want that,
Me either. Historic homes in Mapleton Hill, like I tell my clients, you're not buying a house, really. You're caretaking it. The whole community is invested in it.
You're stewarding.
You are the steward of the house, and anything you do, people are paying attention to what you do in a very intense way. But they're amazing assets, and this has got 5 bedrooms, 6 baths, a total of 5,091 square feet, a bunch of which are going to be in that dwelling in the back. But very functional design, 2-car detached garage, which is super rare. It's hard to get a 2-car detached garage in Mapleton Hill, and they managed to score it for a bit of a discount from the list price. So excellent property. The historic photos at the Carnegie Library are worth looking at. They don't note they do note some historic people. That there was Abram Platt and Fannie Hart, prominent farmers from Iowa who settled there and were real estate investors, originally from Indiana. And then later on, home of the manager of the Northern Colorado Power Company, which later became Public Service. And that's sort of cool to know, although I don't know if that would have much impact to getting alterations. Well, because it also says under Statement of Significance that alterations to this house have diminished its historic integrity. And the photo from 1994 looks horrible. Like they had removed it looks so much better now than it did in the 90s. And it's tough to say that, it's hard to say whether the historic review people what they're going to allow for landmark alteration.
Catch them on a good day.
But I don't know what you would want to alter anyway. The home is turnkey and done. It is gorgeous, and
it's buttoned, yeah. And
it's large enough, right? It has what most people want: the 2-car garage, plenty of bedrooms and baths, space for guests, space for family, and on one of the most prominent streets in the city of Boulder, walking distance to downtown. far enough away that probably not dealing with a lot of random property crime. You're not in Chautauqua. Sorry, you're not Chautauqua. You're not in CU. You're not on the Hill, right? You're not next to CU, so you shouldn't be dealing with a lot of drunk students in this location. It's pretty choice.
Yep, pretty choice. I agree.
All right, next.
McKinley Park Lane, 227 McKinley Park Lane, Louisville, Osmond.
Yeah, great location. Louisville is sort of like Boulder's little brother. It has a historic, adorable downtown. It has its own historic story with miners' cabins, and it has shops and restaurants and bars and events downtown. Most notably, it doesn't have students. And the whole city pretty much shuts off at 9 o'clock at night because people got jobs and kids. And it's not like a party zone at night. It's also a very short drive or bike ride to the city of Boulder. There are paths you can take to avoid riding on busy arterials. It's a great community. I've sold many houses in Louisville. I would live in Louisville without hesitation. And this particular spot is a little cul-de-sac that is close to McKinley Park. And you're only a few blocks away from downtown, far enough away that you're not going to hear any noise or be bothered by the occasional events that are downtown. So interestingly enough, the house itself, let's talk about what it is. It's a 90s era house, right? So this is not a historic house, and it's likely a custom house built in the 90s on a large lot, almost half an acre. 4 bedrooms, 4 baths, 4,300 square feet, and a 3-car attached garage. Because it was built in the 90s, you're going to see a design that works for a lot of people with plenty of storage. But clearly it's been updated over the years. It has some design elements from the 90s, like if you look in the dining area, like the way that the dining area has been separated from the rest of the house.
With that ceiling work.
That ceiling work that I find just annoying, and a lot of people don't like it either. But some do. Some can look past it. But the kitchen's been updated. It's functionally completely turnkey. I don't see any reason to do any updates based on the photography. I guess you could do things in the bathroom, like if you didn't like the tile. You could like those colors are a little dated. It's perfectly pleasant.
Yeah, there's the bathrooms mostly.
I mean, the paint color is totally boring, but the stamped concrete patio is great. Like there's and it's going to feel private. Look how big the backyard, like the way the driveway curves around. I mean, I think this is a spectacular property, and it did not sell right away because of this market. It was originally listed at 2.4 in April. It did go under contract in May, and that buyer terminated for unknown reasons, and then the property was withdrawn at the end of May, and then marked as sold. Boom, for $2,100,000, $2,097,000. It was in withdrawn status when it sold. So somebody contacted the listing agent or the seller and said, "Hey, I got a buyer." And I know all the agents involved. All of them are top-notch agents. And so it doesn't hurt, by the way, to look at withdrawn and expired listings. You might find a home like this one. We don't know why the first deal terminated. It was not disclosed. The seller's property disclosure on the MLS was it updated from that first deal? It looks like it has a May 4th date on it, so there's no new information on the SPD that's on the MLS. So we just don't know the real story of what happened with buyer number 1. But I think buyer number 2 got a fantastic deal, and kudos to their agent for digging up a withdrawn listing and submitting an offer on it, because it got the deal done, and it closed on September 30th for $2,097,000. And I'm a little jealous of the house. I think this is a solid play for Louisville.
Yeah, I really like Louisville. It's not too far from Memory Square Park. That's where I used to lifeguard when I was in my teenage years, so it's a lot of fun.
Nice.
Yeah.
Nice. All right, let's jump all the way back into Boulder and go to Table Mesa. We are talking about 3495 Everett Drive. This property sold for $1.76 on September 26th. It is a typical 2-story built in the 60s on roughly a 7,000 square foot lot. I don't see a lot of homes sell on Everett. I have sold homes on Emerson and Endicott and Findlay and Heidelberg, literally all around this house. But I don't recall selling one on Everett, and I haven't seen a lot of houses sell on Everett. But when you look at this house, when you start looking at these photos, it is classic two-story, meaning that there was a builder that came through and built all of these at the same time. There was an addition put on the backside of this with the vaulted ceiling, and I think the bedroom on the upper, the primary, also got a vaulted ceiling at the same time. Interior is nothing
like a
particular.
peak of mountain views.
Sure. I mean, pretty much everything in South Boulder is going to have a peak if you strain your neck far enough. But the finish quality looks fine. I mean, not particularly exciting. The paint scheme, actually I would argue that was the issue with the last one a little bit, is the paint scheme was a little dated. The paint scheme on the inside is totally dated. And the kitchen is sort of looking 90s era too, maybe early 2000s. But those are fixable. From a curb appeal perspective, we would have strongly recommended our client change the paint color, like that bright blue, bright red, bright white, and then tan brick is not a good look. And they need to talk to a color consultant, or we'll tell them, because I could tell you that these cold and warm tones together, and that even looks like there's some, like, if you look at that porch photo, there's like a green, turquoise green color accent. Like, it makes my stomach hurt looking at the color choices. And that probably cost them $100,000, is not painting the exterior of the house in a way that looked to today's color standards, color preferences. And people don't make a big enough deal about this. But I think it's really important to consider repainting the exterior with colors that are stylish today, and not what whimsy you had 20 years ago to make it red, white, and blue, and brown, and turquoise.
And it's a good paint job from the photos, but it's a little bit too divisive for... You want the broad appeal, right? You want any type of buyer that will make an offer you want to try and attract, and you tend and should play it safe.
It's not playing it safe. It's playing it smart. Like, maybe it costs you $10,000 or $12,000 to
safe
get this house. Okay, maybe. I'm not going to argue to.
I agree.
Maybe, all right, so maybe it's $12,000 to repaint. And what sellers will say is, I don't want to repaint. How do we even know the buyer is going to like those colors? And I mean, this is what you're paying for from your listing agent, is to help you maximize the value of your house and minimize the time on market. And in this particular case, it was on the market for 3 weeks, and then it went under contract and sold at a really big discount. Originally it listed at just under 2. They cut the price after 10 days to 1.9, and then it went under contract and it sold for the 1.76. So when you do the math on the negotiated discount, 176 over 1895, you're looking at 7.1% below list, which for a listing that had been on the market 27 days is pretty darn steep. And I think that if they had painted it, they probably could have gotten full list. And they also got, the buyer also got another concession on something, we don't know why, but another $14,000 for something, so it went even lower than that. But anyway, still a great house. I think the buyer got a great deal on a home that appears to just need a paint job. And maybe some updates, like, okay, you could redo the backsplash. Maybe you definitely repaint that light green Kermit color from the dining room.
That wraps around,
Right, you get rid of that thing. Maybe you pay the neighbor to paint their trim because it looks really... I don't know if that pocket view photo, is that bad trim, or is it just the sunlight on the drip edge creating that weird shadow?
I think it could probably use a coat of paint.
I mean, there's things you could have done to improve your home.
But since that's not the property, you could Photoshop that, right? Because you're not materially changing.
I don't think that's a good ethical decision. Like, the bathroom on the upper level's got laminate. Okay, these are cheap things. And I think they must have been living there, because it's not, no one stages with a grand piano. Right, so that also doesn't help. But the deal got done. And I think the buyer got a great deal on the house on a location that really is clutch.
Yeah.
Like you were
Really
so
good
close
location.
to the park. You're not on the main thoroughfare. And some of these homes have pocket views. I don't know if this side of Everett has a pocket view, but in any event, great spot. And the lot should be mostly squarish, but you're just past the bend. So I think the lot size is probably fine too. It passes all the the initial sniff test stuff. Great house.
Yeah.
Okay.
Good find. All right.
Our next closing. Now we're jumping all the way over to Niwot. And I like to include Niwot deals because we frequently drag our buyers to go see Niwot. People that are new to the community have never heard of Niwot, and it's often overlooked in the menu of options that buyers have. And what you can buy in Niwot, at the quality of the homes, the size of the homes, the quality of the community, the public schools, and you're in close proximity to the city of Boulder without all the big city problems of Boulder. So in a lot of ways, it's like Louisville. It has a historic downtown, but unlike Louisville, it's not incorporated. So you're actually part of Boulder County when you're in Niwot, but you have a Niwot address. But you also have the ability to say, I don't live in Boulder. So throughout the state of Colorado, you won't get people giving you the funny look when you say you live in Boulder, because Boulder has a reputation. You don't have that problem. Yeah. So you get a lot more house for the money. You get great schools. You get the historic downtown. You can drive to Whole Foods in probably about 10 minutes. Granted, you're going to drive often on the diagonal, but you could zigzag and avoid it if you want to. Awesome community. So when I see a house under $2 million, it catches my eye. And this particular house is a late 80s 2-story with 4,300 square feet on a larger than half-acre lot on a really nice little estate circle. And it's a 4-bedroom, 4-bath. The configuration is standard for what most people want. 4 bedrooms on the upper, 3 full baths, 1 half bath, and the basement's fully finished. So all of that is like check in terms of what most people want. I'm not crazy about the color. I'm not crazy about the wooden siding. No. The home was vacant, and
it's
maybe
the
not
gas
harsh.
fireplace and the flooring for the gas fireplace that gets me on this one.
That's so weird. The rock underneath the gas fireplace is so weird.
If you're just listening, it's like this fireplace in the wall, and it just looks like somebody spilled a bunch of river rocks on the ground right beneath it.
Weird. The kitchen, the granite could be replaced with something that was more color appropriate. The hardwood might need to be refinished. Like, the home needs some work. There's no argument the home needs some work. But if you threw 100 into this house, it would look amazing.
For what it is, right? Yeah.
For what it is. It's got a 3-car garage. Yeah. I mean, and it's going to be so quiet and idyllic in this spot. I mean, you might hear the diagonal. So if we were doing our due diligence with clients, we would go on a Friday evening, preferably rainy, and go stand in the backyard and see, can you hear the diagonal? How annoying is the diagonal to you? From the house, you're looking at a distance of, it's a quarter mile. Is a quarter mile far enough away? Most people, it's probably going to be okay. But for some people that are noise sensitive, maybe not. And then proximity to downtown Niwot is, you can cut through the neighborhood. There are little neighborhood social paths to get there. So you could stroll to downtown in probably 15 minutes or less. And go to a restaurant. I don't know if they still have the 1920 houses, or was it 1914? I think it was 1920 house is gone. But ultimately, there's still some nice restaurants, and it's a great community. So, well played. From a deal perspective, it was listed in May for 1.5, and then withdrawn 3 months later and relisted at 1.475. You don't really fool anybody with refresh listings, but people like to do it. Sometimes we've done it when clients really feel like they want to start with a new listing number. Anybody that knows how to use the MLS should know how to pull up the real history. And it sold for 1.375. So that's a negotiated discount. Since we're doing all of them, we might as well do this one too. Clear 1.375 over 1.475. times 1. So that's a 6.8% negotiated discount for a listing that had been on the market for about 3 months before it got an offer, maybe about 4 months. 1 to 3% is what I tell people to expect if it's been on the market a couple of weeks to 2 months, maybe 3 months. 3 to 5% if you're looking at 3 to 5 or 6 months on market, and potentially a lot steeper if it's like a high-end house. And I think this is a pretty good deal for the buyer, having got that discount of 6.7, 6.8%.
Yeah, I think it's very reasonable. And I like the location, and I walk quite a lot too. So
yeah, it's going to need some work though. That weird river rock, something's got to be done.
That's so strange. Don't quite understand.
Don't understand.
Why not?
Why did they do that? All right, our last sale of the week is 772 16th Street. And this property is another historic home built in 1927. Enter the Wayback Machine. So we're back in Boulder. Let's talk about the location first. So this spot is basically at the corner of 16th and Cascade. It doesn't have super high student density here, although you might get some students. And you may get some exposure to the chaos that happens on the hill quite frequently. I don't think it would be horrific. And let me pull up the historic record. It's described, and I really like the architectural description. This was written in 1991. It says, Jerkin Head Cross Gable Roofed House with fieldstone walls and overhanging eaves, gabled entrance bay with round arched entrance with paneled door, flagstone stoop, facade chimney of fieldstone with angled walls and 2 chimney pots, dormer on south side of front gable, 8 light casement windows with stone sills, band of 3 windows to the right of the entrance, large round stone over the gable and parlor window, mature landscaping with rows of Sharon bush and evergreen trees. They went into the landscaping on the architectural description. Okay, the house represents the native stone construction popular in the University Hill neighborhood of Boulder during the early 20th century, as well as the English Norman cottage style. Yeah. So that's the backdrop of the house. No mention of any historic people or who was living there in 1927. The existing owner actually owned it when the people that sold it owned it in 1991 when this historic inventory was done by the Colorado Historic Society. The house itself, it looks like a little London or English countryside cottage. Those stone walls,
very cute from the exterior.
Yeah, super cute. The stone walls are going to be something that you're going to have to get your head around, because if it really is a stone facade, how is that impacting energy efficiency? What if you need to make improvements? One of the things we look really closely at is the pointing, because when you take fieldstone or cobblestone, it is so much more likely to move over time than a regular foundation. Like, this stuff moves, and you should look for signs of proper repair and maintenance over the years when you go to buy it. But it's a home that, they provided the floor plan. Looks like it's got a pretty functional layout, and it's charming in a way, but also a home that, like one of our recent closings, needed tons and tons of work. So Hamish, you saw this. Why don't you describe the interior?
The clients that purchased the home from Tale of the Trenches saw this one right before it. And we got to meet the neighbor. Awesome person, kind of filled us in on the history and the ownership history with this one. And it's sold now, so I don't have to... Yeah, so he gave us a bunch of color and a lot of really good information, but... Like you were saying with the stone facade, I think it was more likely than not actual stone walls, and there were cracks throughout the entire house. And while it looks like there's a lot of square footage, not all of it was usable. And I think they're being a little generous by including the basement square footage as what it is, because the ceilings are about 6'2". It's a pretty small, interesting home. It's definitely got its historic charm, but similar to our Tales of the Trenches. This thing needed work. And I willing to bet, I think, a little bit more than the one our clients ended up going with. At least when our clients are done, they will be a lot more happy where they are now than with this one. That's yeah.
It needed everything. You could see it. So if you go to Realtor.com, you can see the photos of the interior. It's no longer available on the MLS. But when you look at these photos, you see, okay, hardwood floors.
Link in the bio, too.
Massive. Yep, link in the bio. Lots of damaged, cracked walls, water-damaged floors, cracked ceilings.
Water-damaged ceilings, yep. Cracked ceilings.
Low
They're
ceilings.
not hiding it. But yeah, that crack in one of the rooms, Osman, goes across the entire span of the house. Like up, over, through, and then over again, and it's just whoa.
I see popcorn ceilings, which were not original in 27. The attic looks okay, but you can't. So when we go look at a home, you can see all these defects in person. And one of the reasons I like homes that show you the defects is at least you know what you're getting, versus somebody whitewashed everything and hid it. It's a lot harder to see these things, particularly if a good painter came through and patched all the paintwork, patched 100%. All the cracks.
Yeah.
Good luck finding them. I can tell you if my guy patched the cracks, you would never see them.
He's that good.
You would never even, like, they're gone.
Yeah.
They're gone.
They're gone. No, with the students, the neighbor was saying, again, like you said, this is, he thinks like one street over or two streets over, it starts to get on the students, but where he was, it was very quiet, and if there were students, they were the well-behaved variety of student. I think he'd been there for about 3 years now, so this little pocket appeared okay on that run too.
Red cup check.
Yep. Solo cups.
Solo cups. Check for the red cups in the trash bin. So it was listed at 1.25. They negotiated it to $1,010,000, which is a phenomenal price, as long as you're willing to spend another $200,000 or $300,000 fixing all the problems. Can you make it into a functional house? Maybe. I think the location is the biggest difference, Hamish, between what we closed on and this one that closed at roughly the same timeline. And that is, the location is much higher probability of students and is just not as desirable. And the one thing you can't change easily is location. You could fix everything else. So it's okay of a location, but the student factor could change. It's not great. It's not horrible. If you could be on the south side of Baseline, dramatically better location.
Completely agree.
All right. Well,
okay. Shameless.
That is the end of Sales of the Week. Let's talk about shameless self-promotion. Our client has been striking out for at least a year. And that's okay. We really enjoy working with them. And they are looking to buy a 3 to maximum 4,000 square feet. I think the sweet spot might even be 2,800, so slightly smaller than 3, and maybe up to 3,500 would be ideal, with a primary on the main and most of the square footage, if not all the square footage on the main. They don't need a basement. They don't need an upper story, which puts them flat into Fraser Meadows. So they're looking for an updated ranch-style house in Fraser Meadows with quality work that's been well maintained, and they're willing to pay fair value for the house. They're not trying to steal it. They are very honest and ethical buyers, but they are very particular. They don't want a cheap flip, and it needs to really work for their particular needs. And if you happen to be thinking about listing a home or know of a home that's coming to market that matches those criteria, give us a call, because this buyer would love to find their forever home in Fraser Meadows or other parts of Boulder. They'd consider other parts too, but Fraser Meadows seems to make the most sense given how many single-story ranch-style houses with privacy, and the hard part is finding one that's been properly and nicely updated.
Yeah, they've got a keen eye for details, and so they can spot poor repairs or cover-ups pretty dang quickly, and that's been one thing we've walked in and out before.
Yeah. Well, we've seen lipstick on a pig. And that is just really... And we've seen dumb money pay premiums for lipstick on a pig. And it's shocking because the quality of the workmanship, the paint over sprays, it was like... It was really poorly executed updates. They're not going to pay. They're not going to pay a premium for that. They're not dumb money, but they're also not trying to steal the house. So they are serious buyers, and they're ready to go. They've liquidated funds to pull the trigger. So give us a call.
Yeah. Xcel's in the news more than once.
So let's talk about news stories, and these are just our hot takes. I've never really made that clear. Like, this is not necessarily the most in-depth analysis on these news stories.
We're not reporters. Yeah.
Well, reporters aren't going to give you in-depth anyway. But in theory, we know a little bit about, real estate after all the decades of doing this and being in this community. But our first story, Xcel Energy has agreed to pay $640 million. In a lawsuit involving over 4,000 plaintiffs who sued the company over complaints related to the Marshall Fire. So there were not 4,000 homes lost, by the way, but people got smoke damage and had other damages related to that fire. So they've settled at $640 million, and probably the law firms are going to get 30% of that. So let's call it 70% of 640 is 440.
I saw too. A lot more of that's going to the insurance companies that have paid out as well.
Okay.
And not the residents.
Right.
Yeah.
Because the insurance companies have paid out. So that leaves $448 million. 448 divided by 4,000 plaintiffs is it's 112,000 per plaintiff. So that's it split evenly. It won't be paid out evenly. I don't know how exactly they're going to handle that payout, but it's interesting that Xcel settled. The hot take is that it was easier for them to settle than continue to litigate, and they probably were going to lose, and so they decided to exit. And of course, the fire caused more than $2 billion in losses, according to the Colorado Insurance Commissioner. So this is, a fraction, 25% of the actual cost of losses that were incurred. And that's not even including loss of life, I'm sure. Because how do you put a number on that? Pretty painful. And now we as a community get to pay because Xcel just bills us on cost plus pricing. So it's not really a win. It's more like everyone loses when the public utility, or what used to be called public service,
historical route. But no, it says the company has $350 million in its remaining insurance coverage, and it says that none of the additional will come from customers, but
right.
Yeah. So we'll watch the space. Time of use pricing as of October 1st just kicked in. They've got a new structure. I think 5 to 9 p.m. is the most expensive time, and then the rest of the hours of the day are the cheaper periods of time, cheaper hours. But hoping I won't have to worry too much longer with solar.
Oh, I might regret not pulling the trigger on solar for our house. With AI's likely cost impact and all these lawsuits. And Xcel's in the news again for our second story. So the state of Colorado just denied Xcel's initial cleanup plan for the Valmont power plant. And apparently Xcel, or Public Service, dumped tons of coal ash outside the plant over many, many decades. And now they need to clean it up after 50 years. The last time they burned coal was 2017. It's been converted to natural gas, but the Leggett and Hillcrest Reservoir, which is what it sits on, apparently has millions of tons of coal ash sitting in it that are migrating into nearby neighborhoods, and they don't specify which neighborhoods.
Too.
Yep, in the groundwater. They don't mention which neighborhoods it's migrating to in this article. But basically, if I were doing proper due diligence on buying anywhere within like half a mile of the reservoir, I would be checking into this situation, because you don't, even if you have an irrigation well, you don't necessarily want toxic coal ash sprayed all over your landscaping. Even if you're on city water, you want to know what's going on with the groundwater.
Yeah.
And the plan was denied because it doesn't adequately address the cleanup.
So there's arsenic measuring points in one of the pictures too. Did you see that?
I did not see that.
Oh, keep scrolling, you'll find it. But sorry, carry on.
Yeah,
This was cool to see.
The cleanup was supposed to begin in early next year and take at least a decade. Supposed to cost 60 to 70 million. And the Public Utility Commission has to decide how much of that Colorado customers get to spend. So, yeah, I mean, there's all sorts of health risks in the cleanup, as well as what is currently in place there. And there's lots of details in this article, but the takeaway is that buyers should be careful when you are acquiring property that could be impacted by the cleanup or by the current groundwater infiltration. And it's a county thing, and the city has no formal authority over the cleanup because it's outside the city limits. But you really do want to pay attention to this.
Yeah.
As a homeowner or a potential home buyer, arsenic is one of the things they're monitoring.
Just off the back of the settlement, Xcel is now shelling out to clean this up. Power costs are sure to go down.
Yeah. You're rubbing it in, Hamish. You're starting to sound smug about your solar project.
No. I heard somebody in the higher up of the world call coal beautiful, clean coal. So I don't understand why there's anything to clean up, but that's here nor there either.
Yeah, well, I mean, we don't typically talk about national politics, but for sure, those that have been in the pocket of big coal euphemistically call it clean coal. And as far as I'm concerned, that sort of doublespeak is just par for the course for all political parties. But ultimately, I'd love to see some cold fusion happening. And we're getting closer and closer. And if it happens, Hamish, I don't think you'll be so smug about your solar investment if the cost of production goes to zero. Right.
Did you see there's like 3 startups in the... We're sidebarring here, but there's like 3 startups in the U.S. One of them is expecting by next year to have like demonstrable, almost, I think, a commercial plant. I'll have to find you the name, but of fusion.
Exciting.
B1M did a video on it if you're listening. Check that out. But yeah, I thought like ITER and a lot of the European agencies were going to be the first around it, but the good old US of A might still come in on fusion. We'll see.
Exciting future. All right, let's talk about the last article, the last news piece, and that is very local. It looks like construction's about to begin, if it hasn't already, on undergrounding all of the historic Chautauqua neighborhood. And by historic Chautauqua, I mean like the real Chautauqua, like the thing that's right behind the Chautauqua Institution, all those little cottages, all those little streets that are sort of a network of streets in there, these adorable, often without insulation cottages that were built 100 plus years ago. I mean, this is the original Chautauqua built by the Texans that started it here. And they are undergrounding the utilities and putting in fiber. This is a project being managed by Xcel, and Xcel is all the news is all Xcel. I'm excited for this project because undergrounding is not just safer for wildfire. It's visually so much nicer to have underground power lines, and one of the most common objections to buyers through parts of Boulder is that the power lines are just so ugly in the backyards.
Martin Acres, right?
Or many neighborhoods. And
Yeah.
we actually had a budget in the city budget to underground. Xcel's supposed to be contributing to it. It's exciting to finally see something happening with that money and see an actual undergrounding project being undertaken. And who's paying for this? So let me see if they have a section of that in the little. How will the project be funded? The city of Boulder will pay for improvements to the streets and paved alleys throughout the site as part of the pavement management program. The city of Boulder will pay for restoration of the existing historic swales, which will be designed to meet stormwater management specifications. The city of Boulder will pay for the planned limited improvements to the water and stormwater. Undergrounding, Xcel will pay for the main distribution lines, be covered by the 1% fund as outlined in the franchise agreement between Xcel and the city of Boulder. The service lines, the CCA will pay to convert existing overhead electric lines to underground service lines. And that's Chautauqua. CCA is the Chautauqua, the Colorado Chautauqua Association is the CCA.
Okay. I was going to ask, yeah.
Yeah. And then individual residents will pay for the cost of site-specific work needed at privately owned buildings. So it's kind of a big, messy project, but it's finally happening, and it should be done by 2027 with completion involving repaving of the roads.
That'd be good to
hot
see.
take. So if you ever have the opportunity to rent one of those cabins or cottages, do it. They're so cool. And the events all summer long and fall, and the Chautauqua Dining Hall, it's such a precious thing for the city of Boulder. And I'm glad to see the city and Xcel and the Chautauqua Association all jump in to improve something that was just so needed. So exciting. Big improvement.
It's a really special area, too. Yeah, I'm stoked for that.
I'm not sure I could live there. It is really there are so many randoms. Oh my God, there's so many randoms hiking and wandering through yards, but the community is so lovely. So it's kind of this, and the amenity of the institution and dining hall and general store and concerts all summer long.
I'd have to have tinted windows or something, though. It is just, you can't expect privacy other than inside your home, right?
Maybe. Yeah,
maybe.
I would.
They do protect parking now a lot more too up there. Don't park in there. Well, past the no parking zones, resident only areas.
Okay.
They'll get you. Yeah.
Didn't know that. I have my secret parking spots.
You have to share off camera.
Nope.
Oh,
maybe,
okay.
Maybe I'll share
We'll
it
see.
off camera. All right, I'll share it off camera.
Okay.
All right, let's do our carve-outs, Hamish, and wrap up the pod.
Yeah, couldn't get Xfinity out of the news, but you just mentioned fiber. I have been anticipating fiber here at this house since I bought it roughly 3 years ago. I called the fiber service and asked when they were planning on installing it, and they said 2 weeks out, 3 years ago. Well, I'm beaming into your ears today using fiber, and I'm just excited to finally have it. For the layman, there's not really a noticeable difference at all. In my line of work, specifically media, video editing, and this podcast, it makes a huge difference. So Comcast or coaxial cable internet, for the most part, in theory, can download and upload at the same speeds. However, Xfinity didn't update their systems, and so it doesn't. Fiber does. And so with that, this podcast, for example, will be roughly 14 gigabytes once I export it, and that takes about an hour to upload. With fiber, it will take 10 minutes. That's 50 minutes of my day that I get to not babysit a computer. So quality of life there. It also, from a work standpoint, we have a lot of remote clients, and we have endeavored to get out to the property, take a 45-minute plus high-definition 4K gimbaled video of the property, highlighting its flaws more than the benefits, and getting it back to the clients within 48 hours. we shoot for 24 hours, and truly, with the speed of uploading now, I'd say we're closer to a very safe 24 hours in 4K delivered. So it's just about dang time. I'm glad it's, over. I've got 2 network switches and a bunch of networking stuff going on, which I geek out on, but the overall is it's slightly snappier. Nobody's really going to notice it. Like, my roommates couldn't care less. But for me, for uploading, it is just a night and day difference. And it's also cheaper. Xfinity was $100 a month, and this is $68 a month.
Is it municipal?
How do you mean?
Who owns the fiber that you're getting? What service are you getting?
Well, it was Metronet, and then I got an email right when they activated my service that it's now T-Mobile. So,
okay.
What are you going to do?
Well, one thing I just want to clarify, and that what Hamish described is a service we do typically for relocation buyers, but sometimes for buyers that are here in town that can't make it to a showing because they're traveling. And we firmly believe that you should never miss out on a house because of travel schedules. And the best way for us to help our clients who are typically relocation, they see a house that they're really excited by, we schedule a call to discuss the house. If it passes that sniff test, we then go shoot the house. 4K gimbaled video pointing out the flaws as well as what we think is right about the house. And if you want the house at that point, we upload it, right? So this video is edited, it's uploaded. We've got dozens of examples if you want to see it. These are private videos of people's homes, so we don't share these videos publicly. But if you're interested in that service as a client, we'll show you a video so you can see what they look like. And I usually sell a house a year this way. Well, people will say, that's the house, let's do it. We'll negotiate the deal, put it under contract, they'll fly out during inspection, and they still have the right to terminate, but if we did our job right, there will be no surprises.
Hidden surprises. Yeah, exactly.
There should be no surprises because we really threw the house under the bus when we did the video. And that's how they've gone. I've had one deal terminate in like a decade of doing these videos that we missed something.
Do you remember the reasoning for that too?
I do. And that was because the home had 2 front yard setbacks. And the reason they wanted to buy the home was as a project to pop the top and expand it. And that dramatically limited the footprint of the potential future house. And they didn't know that, and I didn't know that until we started working on it. And they already
tracks, yeah.
So that was a surprise. And that was a long time ago. That was like 12 or 13 years ago. And now I know about side yard and front yard setbacks. And if it's on a corner lot, you could have 2 front yard setbacks. Go look at the neighbors' houses on the other corner and see what they look like relative to the streets. And if they're uniform on both sides, with the fronts on both sides, you probably have 2 front yard setbacks, which can shrink your building envelope. Anyway, I would not have known that without stumbling into it. And that's the nature of real estate. You learn things as you get more experienced in this industry. But yeah, that killed that deal.
Yeah. Aside, though, we can now provide those videos a little bit quicker. At least it's a lot nicer than sitting there waiting for the publish button to come and seeing like a estimate finished uploading 30 minutes from now, or however long.
I didn't know you were babysitting the computer. Like, why don't you just go do other stuff while it's uploading?
I like the upload fails or something happens and it's like better to be around it.
You're just kind of checking on it. You're not like staring at the spinning upload, are you? Like, you're just checking on it.
I mean, I'm doing other stuff in between, but to be able to like go and do it,
okay.
It's still better.
All right.
Like,
I'm just giving
it's a huge weight off my back. Or like, if I'm doing like revisions for a listing video, I can get that revision back to you that much quicker.
That's true.
Yeah.
That's an advantage. For sure, it's an advantage. I'm jealous.
It's definitely a help. No, I mean,
I'm stuck on Starlink and I'm paying like $120 a month or something. It's annoying, but it's so much better than any other option in the mountains. There's really no choice. There's no competition.
No. Mom was saying that in New Zealand, a bunch of people there are going from fiber to Starlink, which I don't know the reasoning between that, but sure. Anyhow, that's me. That's fiber. Thanks for tuning in, Oswin. Take it away.
All right, here's my carve out. We are at or near peak season for leaves, and this week I love October. I love the fall. It's my favorite time of year, And this week I've been forcing myself to get out. So I've been commuting to meetings in Lafayette and in Boulder on the motorcycle because it puts you way more in nature than a car. And I got up to the peak in a convertible I own just to give that vehicle some exercise and enjoy all of the amazing leaves and colors. And, just got away. So what I'm trying to say is if you have the opportunity to go out this week, you're probably at the peak of the higher elevation colors. The lower and mid elevations are still changing, but midweek is like the best. It's one of the benefits of this industry is sneaking away from the office because you can and enjoy our autumn colors. And the next couple of days should be perfect. By the time you hear this podcast, it'll be raining, but maybe this weekend.
Is it raining this Friday?
I think I saw rain in the forecast. So let me look at this. Hold on. We're maybe encouraging. This might be snooze you lose. It's supposed to rain Saturday night, 30% chance of showers, but it's supposed to be mostly sunny during the day and mostly sunny on Sunday, but just slight chance of showers in the evening. So this weekend still looks great, but get out there if you can. Enjoy the autumn colors. I know I have. It's just spiritually renewing. Bicycles or motorcycles or hiking or get into a convertible or whatever you got, just go outside and enjoy this amazing season and this amazing place we live called Boulder, Colorado.
Yeah. I'm a little under the weather, but I think I may text Pedro and tell him Spanish not this week and go for a little drive instead.
Sounds good?
Yeah.
Sounds good.
At least I'm isolated. Yeah. That on your story, check him out, Osmond Parvez on Instagram. But on your story, that looked so nice. So I want to go listen to some music and drive.
You got to hear the music in those Instagram stories though, because I often tie the music to what, and they can
Easter
be
eggs to
contrary.
it.
They're little Easter eggs with the music. So check out the music. But I want to thank you, dear listeners, for coming to the podcast, for listening to this. If you've made it this far, we deeply appreciate your patience when we don't have a podcast like we didn't last week. Hamish was traveling. And we deeply appreciate your comments, your thoughtful shares with us privately. It's made the podcast better, and the clients that we've gained your trust from listening to this podcast, that means a lot to us. If you'd like to learn more about what we do, you can find us at houseeinstein.com. And you'll have our contact information there, also a bunch of content that you may not see in other places. And be sure to sign up for the newsletter, because one of the big takeaways from this summer is how much more frequently it needs to come out. And I am making plans to reinvigorate. I've been a little rusty, so getting started again is a little difficult, but we're going to make it happen. And thanks again for joining us. You have anything else to say, Hamish?
Good to be back. Last podcast I talked about where I was going. It was a family trip. Those have maximum durations, and it's good to be back. Clean sheets, clean house, clean car. Yeah.
Excellent. Were you sleeping on the couch?
For the second half of the week I was.
Yeah.
The grandfather came to town, and I got kicked out of the guest room.
Yeah, totally.
Yeah. So.
All right.
Good.
Awesome. We'll catch you next time. Thanks again. Bye-bye.